In this video, I'm going to share everything you need to know about K92 Mining, stock ticker KNT on the Toronto Exchange in Canada, and KNTNF on the US OTC. And for full disclosure, I do own shares, so stay tuned until the end where I'll share my outlook on the stock and how I'm personally positioned. K92 is an emerging Tier 1 mid-cap gold producer with their K92 mine in Papua New Guinea. They've been rapidly increasing production the last several years with over 776 production growth since inception in 2018, and they have one more expansion planned and fully funded targeting late 2027. K92's land package is positioned alongside multiple world-class deposits, and they're exploring multiple areas concurrently to turn their land package into a district of value streams that continue propelling them into a larger gold producer. Today, we'll focus on three deposits they're developing. The first deposits are the key value generators and what they're producing right now, which are the Cora and Judd vein systems at the K92 mine. These are high grade, meaning they have a lot of gold per ton of rock. As of October 2025, K92 completed their Stage 3 expansion, which projects production to almost double to over 300,000 gold equivalent ounces per year. And when the Stage 4 expansion is completed, they're expected to increase that further to 400,000 ounces per year. Of note, too, is that the Stage 4 expansion is fully financed, meaning K92 will not need to raise more capital, so shareholders do not need to worry about being diluted from issuing new shares. They are printing money right now with the production and gold prices, so everything is self-funded. Looking at the cost per ounce, it is important to note that the all-in sustaining cost has been increasing over the years from an average of about $900 in the early 2020s to about $1,300 today, but this is a natural increase as they expand operations and build the mine. Remember, development costs that impact sustaining cost happen immediately, but the benefit happens over time, and we're seeing that with the record production outputs. The accretive value of the production growth way more than offsets the gradual increase in all-in sustaining cost. And one other factor on cost is energy prices, namely oil as it's used in production. But from my analysis, only about 10% of cost is oil sensitive, so it's relatively minor. The second deposit is the Arakompa vein system, also at the K92 mine and also high grade. K92 is currently drilling this system with up to 5 of their 12 rigs exploring at any given time. The maiden resource for Arakompa should be released in the first half of 2026. Based on available data and using AI analysis, estimates for Arakompa come in at about 3 million gold equivalent ounces, mostly inferred, with about 1 million being vein and 2 million being bulk. Vein style mineralization is typically higher grade with higher confidence in economics, and bulk style is usually lower grade and higher capex, which means it's lower confidence in the economics. The third deposit is Blue Lake, which is a large-scale gold copper porphyry. A porphyry is a type of deposit that represents a larger, lower grade, and thereby longer life deposit. They are quite early stage with this deposit, so it requires a lot more drilling and studies to parse out the economics. But a couple interesting points are the measured reserves being 14.6 million gold equivalent ounces, of which about 4.2 million is gold, and the deposit is just 4 kilometers from the K92 mine. They do mention Blue Lake is just one of several porphyry targets in the region, so there's also additional opportunities for new discoveries. Lastly, for projects, there's also the Wera vein system, which is a greenfields discovery located 10 kilometers southwest from Cora and Judd. Looks interesting, but this is even earlier stage than Blue Lake, so additional drilling will help assess resource estimates. It's important to note, though, that all these targets are fairly close proximity to the operating K92 mine, so in the long term, if these shape out economic, which in an elevated gold price environment they might, this can turn K92 into a multi-mine producer with significant production increases in cash flow. Looking at the management team, just a few highlights here. The CEO, John Lewins, has a track record of turning new deposits into profitable producing mid-tier mines, with several examples in his career. The VP of Exploration, Robert Smiley, actually made a significant discovery right here in Papua New Guinea when he was at K92 Mining, so he's in his stomping grounds with K92. The director, Mark Eaton, is currently the executive chairman and former CEO of Bellow Sun Mining. I've traded that stock before. And the director, Sarab Honda is currently CFO of Metalla Royalty, which is actually my largest stock position, and the former CFO of Titan Mining Corp. For insider ownership, it's not very high percentage-wise, about 2.2%, with most of that being John Lewin's. But K92 is a larger cap stock at 6.34 billion CAD right now. So for example, even though the second largest holder is Cindy and she only owns 0.07% of shares, that still represents a $4.4 million position. Of course, we can't know the size relative to their net worth though, so more important is to look at recent buys. People sell stock for all kinds of reasons, irrespective of their outlook on performance. So unless there's material selling, I don't think it's worth paying attention to. And for K92, there's only been a few small sales. But people buy for only one reason, and that's that they think the stock is going to go up. There's been some small buys, but the clear highlights are Cindy increasing her total position over 100% on December 31st. And Nan increasing her position by almost 100% on December 4th. And then John Lewins increased his position by over 25% on September 12th. The price that they paid for these buys was roughly between $16 and $24 per share. And today the stock price is at $26 per share amidst the gold and silver bull market. So these insiders clearly see upside into 2026 and beyond. For financials, there's a lot of methods for valuing mining companies. I like to keep things simple, and since K92 is a producer, I'm going to model using simple cash flow multiples. Now, for cash flow multiples in a gold bull market in the mining sector, it's reasonable for a producer to be valued at 8 to 10 times cash flows, but if the bull market is strong, then they can push up to 12 to 15. Total production for 2025 was 174,134 ounces, but looking ahead with the Stage 3 expansion, production is expected to be 300,000 ounces in 2026 and over 400,000 in 2028. So using an all-in sustaining cost of $1,200, which aligns with where they're at, and a gold price of $4,500, that equates to cash flow of $990 million in 2026 and $1.32 billion in 2028. If gold is instead 6,000 in 2028, that equates to $1.92 billion cash flow. So valuing that at 10 times cash flows would put K92's market cap at $19.2 billion, which is 200% upside to today's price. And valuing at 15 times cash flow, if things got frothy, would put the company at $28.8 billion, which is 350% upside to today's price. But I want to make the point that even if gold bounced around and stayed at 4,000 for the next few years, at production of 400,000 ounces in 2028, that's still annual cash flows of $1.12 billion, which with a 10x multiple is a valuation of $11.2 billion, or 76% upside to today's price. So K92 doesn't necessarily need a higher gold price for continued upside in the stock since they're already growing production. Moving to risks, I see three that I'll cover. First off, of course, there's the usual operational risks of running a mine. Any impact to production or temporary closure of the mine would cause significant impact on the share price until the issue is resolved. Second is the jurisdiction risk. In Papua New Guinea, using this political risk heat map from Sprott, Papua New Guinea is rated at high risk. I'm not going to cover it in detail, but of note is the political risk. In 2020, one of Barrick Gold Mine's projects got nationalized by the government, which basically means the government took it over and it became worthless to Barrick. If it can happen to Barrick, one of the largest gold mining companies in the world, it can happen to anyone. That being said, in K92's investor deck, they do show strong relationships with some of the PNG government, including the Minister for Mining. I'm personally not too worried about that point. The last risk is a significant and sustained drop in the gold price. This would obviously be detrimental. However, I don't suspect that will happen over the next few years, and that's a great segue into my outlook and how I'm personally positioned. For K92, with the profitability of Cora and Judd, the coming addition of Arakampa, and the exploration drilling of these deposits that might expand the resource, K92 has significant cash flows and likely a 15-plus year production runway ahead. As for the gold market, with the backdrop of rising budget deficits and debt, currency debasement, negative real rates, and the cyclicality of commodities, I think gold and precious metals in general are in the midst of a strong bull market, which of course has been evident in the price rise we've seen the last couple years. Further, modeling the gold price based on technicals and multiples seen in prior bull markets puts gold into roughly the 7,000 to 8,000 range within the next few years. I personally think we'll see at least 6,000 and perhaps much higher, but modeling K92 at 6,000 is reasonable considering if gold did peak around 7 to 8K, they might have an average sale price around 6K or 6.5K. But also note in my valuations that I did not include any additional production they might have if, say, Arakompa started being mined in 2028 to 2030. So all in all, with the increased production outputs, optionality on additional production increases, and the bull market in gold prices, I think the 3 to 4x upside in K92 over the next few years is absolutely reasonable, which would have the stock pushing over $100 Canadian. For me and how I'm personally positioned, K92 is my largest gold miner position and the sixth largest overall portfolio position, excluding cash. It's about 3% of my total portfolio, and I'm currently up almost 300% on the position. So I'm happy to hold for the gold bull market despite the risks shared in the video. However, as with every position in my portfolio, I'm quite nimble depending on prevailing circumstances and opportunities at any given time. I actually have over 48% of my portfolio exposed to precious metals investments. On my channel, I share my entire $500,000 portfolio, real-time changes, and why I'm making those changes completely free. Subscribe to stay up to date on how I manage my K92 position in this bull market and the other stocks in my portfolio. If there's anything I didn't cover you would have liked to see, let me know in the comments below. Thanks for watching. I'll see you in the next video.